Welcome students to my class Accountancy Simplified. In today's class, our topic is bank reconciliation statement and the mode of preparation of such statement. In the earlier class, I have discussed the definition of BRS, importance and the benefits we derive from preparation of bank reconciliation statement and the need for preparation of bank reconciliation statement. In today's class, which is very important, we shall learn as to how to prepare bank reconciliation statement. Bank reconciliation statement may be prepared at different point of time, either before correction of cash book or after correction of cash book. First of all, we shall discuss preparation of bank reconciliation statement before correction of cash book and on the basis of cash book balance. Preparation of bank reconciliation statement requires enough and good knowledge on maintenance of cash book. Bank reconciliation statement is prepared with the bank balance as recorded in cash book, both in debit and credit side. And you will have to understand the impact of debit entries and credit entries in cash book. If cash book is debited, its impact on cash book balance is that cash book balance gets increased. And if for any item cash book is credited, the impact of cash book balance is cash book balance gets reduced. These are the areas which are to be understood first. Otherwise, you cannot solve any problem on BRS. BRS preparation is very simple. You will have to understand the impact of the items which are to be considered in BRS on the cash book balance or passbook balance as the case may be. Now, what is the procedure? The person in charge of preparation of BRS has to identify the items which are not appeared in the passbook or in the cash book if we take the basis as cash book balance. If any item impacts in decreasing the cash book balance, we'll have to simply add cash book balance, and if any item results in increase in cash book balance, we'll have to deduct that item from cash book balance. Say bank balance as per cash book as on 31st December 2020 was rupees 20,000. A check for rupees 2,000 was deposited in bank on 30th December. But the same was credited by bank on 1st Jan next year. So this is the item of BRS because the cash book balance gets higher with the deposit of check, while the passbook balance has not been made higher as it was not credited within the BRS date. So what is the result of the deposit of check in bank in the cash book? The impact is cash book balance has increased. So if we prepare BRS on the basis of cash book, we will simply deduct the deposit of check from the cash book balance. In case of issue of check is recorded in the credit side of cash book, and cash book gets reduced when check is recorded as issue. And if that check is not presented for payment within the date of BRS, we'll have to simply add that check to make the balance of both cash book and balance in line and to make a parity of cash and bank balance. These are the example. So what he does was the person who is in charge of BRS, what he does, he take the cash book and checks all the entries with the passbook or the bank statement of that particular period for which BRS is done. And he sorted out the items which either appear, which are not appear either in cash book or in passbook. And he then thinks about the impact of those items on the cash book balance. The impact is the cash book increases, he will simply deduct that item from cash book balance, and if the cash book balance gets decreased, he will simply add that item. For example, bank may deduct some charges from the customers on account of different services and debited the passbook. Debit in passbook means decrease in passbook cash bank balance, and in credit in passbook means increase in passbook balance. You must remember it. Debit in passbook means decrease in passbook balance, and credit in passbook means increase in passbook balance. Bank charges debited by bank for Rs 50 not recorded in cash book within the date of BRS means passbook balance has been decreased while cash book balance has not been decreased. So we'll have to simply deduct bank charges from the cash balance as given in the problem. Now, if bank realized some amount of money from debtors to whom goods were sold on credit on behalf of the customer and send the intimation to the customer after the date of BRS, the cash book will not reflect that collection from debtors, while that has been reflected in the passbook in the credit side. Credit side of passbook means the passbook balance has been increased while the cash book has not been increased. So we'll have to simply add that item with the cash book balance as given. Similarly, on some occasions, bank is being instructed to make regular payments like electricity bill, telephone bill of the customers as per instruction, and bank does it regularly and make send messages to the customers as and when the payment is made. And if that payment is not recorded in the credit side of the cash book, what is the impact? Cash book balance is higher and passbook balance is lower. So we'll have to simply deduct those two items from the cash book balance to make a parity between the cash book and passbook balance. Now, this is very simple. If you take the basis of cash book, you'll have to impact whether the cash book is decreased, you'll have to simply add that item, and if the cash book is increased, you'll have to decrease that item. For example, check deposit bank is to be deducted, and check issued not presented on the date of BRS is to be added. Very simple. You will have to understand cash book well. Now, what is the impact of those items in the balance on which the BRS is prepared? Similarly, if the said BRS is prepared on the basis of passbook, sorry, we will have to see the items which are not appeared either in the passbook or cash book as in the case of cash book. Now the basis of preparation is passbook balance. Now we'll have to see the impact whether the passbook is higher, then we will simply deduct that item, and if the passbook is lower, we will simply add that item. Bank charges debited by bank in passbook results in decrease in passbook balance. If that is not recorded in cash book, we'll have to simply add cash book balance. We'll have to simply add passbook balance to make it similar, to make it at parity with the cash book. Any collection made by bank on behalf of the customers and credited in the passbook, it results in increase in passbook balance. And if that is not recorded in cash book, you will have to deduct the item from the passbook balance to make a parity with the cash book. Check issued on 30th December for rupees 5,000 and the date of bearer is 31st December, and the same check was not presented for payment before 31st December. Check issued means cash book gets decreased while passbook has not been decreased. So passbook balance is higher. We'll have to simply deduct that item for passbook balance. Similarly, check deposited with bank on 29th of December while the date of BRS is 31st and the said check is credited on 2nd Jan next year. What is the impact? Cash book is higher, passbook is lower. So we'll have to simply add that item of check deposit with the passbook balance to complete the BRS. So this is very simple. You will have to understand the impact of those items either on the cash book balance or on the passbook balance. You will have to first understand cash book very well. What is of impact of debit balance in the cash book and what is the impact of credit entries in the cash book. Another item which is very similar in exam problems, that is undercasting and overcasting in cash book balance. Mind it and remember it. BRS is done with the bank balance as per cash book, not with the cash balance as per cash book. Because cash in hand at the end of a particular period is verified with by physical checking, which is not possible in case of bank balances. That's why BRS is prepared to see whether the bank balance as disclosed by cash book is authentic or otherwise. Mind it, BRS is prepared only with the bank balance as per cash book. Now, if it is given in the problem that undercasting was made in the debit side of the cash book in bank column, undercasting means short addition. That means what is the impact? Cash book balance is less. So if the basis is cash book, we'll have to simply add that item. And in case of overcasting, overcasting means excess casting of cash book balance. If overcasting is made on the debit side of the cash book, then cash book is higher. And if the basis of preparation is cash book, then we'll have to simply deduct that item of overcasting. Now, if the credit side of the cash book bank column is undercasted, what is the impact? Cash book balance is increased. We'll have to deduct that item. And if the credit side is overcasted, cash book balance is decreased. We'll have to add that item with the cash book balance as given in the problem. These are the common items in BRS problems. Very simple, very simple. Don't get confused. Just simply see what is the basis of preparation of cash BRS. If the basis is cash book, just think the item which is under consideration has impact on what is the impact of that item on the cash book balance. If the balance is higher, simply deduct it, and if the balance is lower, simply add it. And the format of BRS is given in different textbooks and problem books. Just make a statement with two columns, one outer, one inner. Bank balance as per I am showing you in the video what should be the format of BRS. Just see the format. And you have to prepare BRS on this format and with the language as given in the format for getting full marks. Okay, follow this format and the details, the language of details as given in the format for having full marks on BRS. BRS is very simple if you understand the impact of the items which are not appear either in the cash book or in the plus book. First of all, what a preparator of BRS done, he identify the items which are not appeared either in the cash book or in the pass book. Mind it, the date of BRS is very important. If any item is given in the problem, check deposited for rupees 500 was cleared by bank on 31st December and the date of the BRS is 31st December, that item will not come under BRS because check was deposited on 29th December and the same was credited in the passbook on 31st. So there is a parity between the cash book and passbook. No question of taking that item in BRS. There may be some such problems to make the students confused. Don't get confused. The date of BRS is very important. Okay, and BRS is is prepared either weekly, fortnightly, monthly, half yearly or annually as the case may be, as is the policy of the management. It depends mainly on the volume of transactions of that particular unit. I have already told in the earlier class. So BRS is very simple, don't get confused. Simply understand the cash book and the items which will be given in the problem is to be seen whether that item results in increasing cash book balance, and if the basis is cash book, then simply deduct that item. And if the item results in decrease in cash book balance, simply add that item. Now, we have discussed the preparation of BRS on the basis of positive balance. Positive balance means cash book, bank balance as per cash book, positive balance means debit balance, and passbook positive balance means credit balance. But if it is otherwise, bank balance may have overdraft balance. That means deposit withdrawal is more than deposit. Overdraft balance means cash book balance represents credit and passbook balance represents debit. Then what we will do in case of overdraft balance if the basis of preparation of PRS is overdraft balance? What we will do? Simple procedure is simple. Just reverse it. If the cash book is less, then deduct it. If the cash book is higher, then add it. Nothing else. Nothing else. If the cash book balance is less for any item, simply deduct cash book balance for that item, and if cash book balance is increased for any item, simply add cash book balance with that item. Nothing else. So BRS is very simple. You will get full marks if you understand the impact of the items on the either on the cash book or passbook balances. And study cash book very carefully and with full attention so as to understand the impact of cash book entries in the in cash book entries for better understanding of BRS. If you do not know cash book well, you cannot solve any problem on BRS. So go through cash book very carefully before going through BRS problems. Okay, that's all for today. Before I conclude my lecture on BRS, I once again appeal to all my subscribers, all my listeners and followers to subscribe my channel and subscribers to share and my videos for wide circulation of my video among the students community of the world, not only in India but also in other countries. Thank you. Goodbye.